I'm about to share my screen. All right, so pretty much we're just gonna be going over like he wanted me to go over like market structure stuff with you all and some back testing. So that's pretty much what we're gonna be going over. And if anybody, got any questions or mindset things or anything that they want to talk about, feel free to unmute yourself and ask. So the first thing I basically just wanted to just touch on is everybody needs to understand, of course, structure within itself. So, we all understand what makes an uptrend. Right. So just starting off, we always start off with market structure. And the reason is because, this is the only thing that always comes first. Market structure comes first over any technicals, over Fibonacci, anything. Because this is the information that basically can't be manipulated. Any technicals, anything like that can always be manipulated. Because you draw your technicals, right? This right here will actually just be like a low, basically. But no, it'll be a little low. I drew it. I'm tripping. And then a lower high. All right. So understanding, just looking at this area, right? How we go about understanding like trend and our entry points and things like that is being able to understand market time frame correlation and how we're trying to be a part of this bigger system, right? So the first thing you do, like I said, when you get on a fresh chart is you always want to know where you're at. And the only way to know where you're at is to label out your structure points. And these are structure points, right? So the next thing you want to look for is where would your tested points be, right? Because we know what makes an uptrend, higher highs and higher lows. Uptrend cannot be broken until a higher low point is broken, right? And that's where we would have, our break of structure happen at. I'm gonna make that a different color. Hold on. So that's our break of structure right there. Okay. So everybody's on the same page. But just so people understand what they're looking at when they're looking at into these candles, you have to understand what's happening on the lower time frames and what's happening on the higher time frames. So if my main analyzing time frame is H1, because just like on the webinar earlier with Drew, how he talked about, understanding and using all time frames, that's cool. You know what I mean? Like, and that's what you need. So that way you're not missing out on any information, but you also have to have a reason as to why you're on the time frame at a certain time. Because you could be looking at the wrong time frame and getting misinformation. Okay. So that way you're not just jumping around because and understanding that each time frame has its own structure, right? So the H4 has its own trend, M30 has its own trend, M5, H1, all of those are going to look different, but they're going to all show you something similar to show you a certain bias and where the market is trying to go. Okay, let me make sure I don't got nobody else. Gotta add, I know people be joining late. Okay, so when I first get on the market, so if my main time frame right here is H1, then I understand that my breakdown time frame. So my time frame. So I would be doing, when I say main time frame, I mean I would be doing all of my technicals on this time frame. So my Fibonacci. I'm gonna be looking for my major market patterns, my trend lines. I'm gonna be looking for candlestick patterns as well. You know, anything far as technical analysis, my counter trend lines. So all that's gonna be done on H1. My reference time frame. So if I was looking at something and I needed you know, more data, then I could, if I seen for instance a candle setup on H1, then I would go to H4 just to make sure things are valid, because I understand that H4 is going to show me thicker candles, right? Or maybe even the daily, you know what I'm saying? Just depending on what type of trader you are. But me personally, if I seen a setup on H1, then it's like, all right, let me just take a peek at H4 just to make sure that that momentum is going in the same direction as well, right? And then, like I said, my entry time frame, I would drop down personally to you know, my M30, M15. But just for the sake of things, let's just say M15. All right. Which is going, I'm gonna turn that green, turn it yellow. So y'all get the difference. So H1 main time frame, if M15 would be my entry time frame. So if I'm starting out looking at the market, right, and I haven't got to my entry base point, right, and I understand what my entry base points are, because if I'm on an uptrend right now, my entry base points are going to be at my higher low points. And the reason that they're at my higher low points is because that's our support. That's the floor. That's the lowest point the market has come before it transitions. Okay. And understand that you're going to see transitions as well at each tested point within the market. So these are tested points that actually transition the market. Just to make things a little quicker. All of these are tested points. Because it turns price. Okay. So what I would do now, because I have no higher low point here, which isn't an entry base point, I would have to analyze the market. So analyzing the market, if I'm on M15, I would be seeing, at this point, I would be seeing the uptrend, right? So I would be seeing higher high points and higher low points. But on my H1, I would be seeing bullish candles, right? Until I reached a point of resistance, which is right here. Once I reach a point of resistance, and let me note that my point of resistance would be on my main time frame, not my M15, but my H1, because that's my main time frame. I would then put a random line up there on the median of the wicks. And the reason I want to use the median of the wicks is because that's the average price of that high point. Okay, so if I have and what make, I'm not sure if everybody know what makes resistance, but what would make resistance here would be in my case, a purple candle and then a yellow candle, like this area right here. Okay, so that's what will make resistance, because I thought I put a line right there. Hold on. Like for instance, this would be an example. So looking at this area right here, you see a purple candle, which is a bullish candle for my chart, and then a gold candle, which is a bearish candle. So this blue candle, this bullish candle formed at this level of resistance, and then it was followed by a bearish candle that maintained this level of resistance and didn't break past. Okay, so that's created a tested candle. So for me to understand, I know in my last webinar, we was talking about how do we know if things are valid. So this is how. When you see that purple and gold candle reach the top, I would then go to my M15. And on my M15 time frame, I would look for some type of transition. And that transition would look like this, right? It would be, let me put this up here. It would be an uptrend that you see. Right? Followed by that break. And then you will see the continuation of the downtrend movement. Okay? Shit, hold on. And that break happened right here. Okay? And let me change the color of this. Right? So just so I can make sure everyone sees, right? So this is what I would see on my M15 time frame. Okay? So you would have seen that the market was making higher highs, higher lows, higher highs, higher lows, higher high, and then the market came down, broke this higher low right here, create a lower low, and then give you that first lower high point. That's where you would see up here to let me know that the market made some form of resistance, and that transition, that tested area of resistance is now valid because it came down, broke, and made that first lower high point. So now we're on this counter trend. And while we're on this counter trend, what we will be seeing is lower highs and lower lows on our M15 structure. So like I was saying, you would begin to see that lower high, lower low, lower high, lower low. And then on our H1, all we would see is bearish candles. You know what I'm saying? So we would see these gold candles like this, right? If we're in an uptrend, this is if we're in an uptrend. So you in this area, that's what you would see is the gold candles coming down to probably test a PRZ level, right? But we can't draw our fibs yet because we don't have a point A. So we would just be analyzing, like I said, until we get to entry base point. So once we seen that the market came down here and on our H1 time frame, like I said, on M15, making lower lows, lower highs, H1 bearish candles. Once it got to our H1 time frame and we seen support, meaning that we seen a bearish candle followed by a bullish candle, right? So this is an example of that right here. Like I said, I would draw my random line. Let me turn it blue just for the sake of things so we're on the same page. I would draw my random line on the median of the wicks because that's the median price of that lowest low, you know, that low point that we're looking for before price transitions. But how will we understand that this is valid, right? How will we understand that this support here was not these three candles? It would be these two candles right here. How do we understand that this is valid? What we would do is, same way like up here, we will look for a transition on our M15 time frame because that's our structured time frame, right? That's the time frame that we need to see the detail. Because on H1, on our analyzing time frame, all we're seeing is these bearish candles, right? So we have to look deeper to find out the story of this candle. So dropping down to our M15, what we would then see, let me use a different color this time. We would see a downtrend. So we'll see the market making a downtrend, lower high, lower low. And then we would see the market break. Right. What did I use? Not that one. Hold on. Right. So we would see this on our H1 time frame, and then we would see this happen on our M15. So we would see the market was downtrending. So we seen our lower low, lower high, lower low, lower high, lower low, and then the market pushed and broke break a structure, broke this lower high point right here, made a new higher high, came back, made its first higher low point. Now at this higher low point, this on our M15 time frame, once we understand where we are, that we're at a higher low point, price was down here, we analyze seeing a higher high point, we're not at our higher low point, we got our transition, we understand that things are valid now at this point. What we're looking for is some type of information to let us know that the market is ready to continue with the bullish movement, right? So how we would go about that now is when we find our bullish variation patterns or our bullish engulfing patterns, right? So, and what those basically tell us, I'm not sure if you all know what those are, so I'm gonna just go over them real quick. So, purple, and then let me see, gold. Right. Okay. So if this was the candle, this would be an example of a bullish engulfing. And the reason that it's an example of a bullish engulfing is because you know that bearish candle opens high, closes low. This candle opened low, closed high, but it closed above the opening of this bearish candle right here. And this little like the rest of this candle that's left over above is enough pressure to let us know that it's more buyers in the market at this time. And this, we would be looking for this pattern to happen right here at our higher low point in structure, which is also our entry base point, right? So after we seen that happen, that's when we would want to take our first entry, or we will have our first entry opportunity somewhere along this area with a stop loss being below our higher low point. And that's because it's underneath our floor, right? So stop loss would be somewhere below our higher low point outside of structure. So that way we give the market enough room to breathe. And also if it comes down here to hit our stop, then we understand that our the bias, has shifted, the transition has shifted, because it would take a lot of selling pressure after seeing all of this, to go the opposite way, right? So that's how you go about using market structure and understanding transitions to get, certain type of entries and to look for certain type of confirmations, right? So that's a bullish engulfing pattern. An example of a variation would be something along the lines of this. You can have like a doji right here. Maybe another candle right here. And then something like that, right? Right, but it tells the same story, and that's all that matters, right? So this is a variation pattern right here, just so everybody's above this on the same page. And like I said, same story. You had your bearish candle that happened right here, open high, close low. You had a doji that happened, so we would cancel the doji out because that's just neutral price. We had some type of harami pattern right here because it closed in half of this candle. That's just candlestick analysis, and then understanding that the next candle, you could have been early if you understood the candlestick pattern, but just for more confirmation, understanding when the buyers are ready, you will wait for that next candle to close, and then understand that it closed above the opening of this bearish candle, letting you know that it's more buyers in the market at that time. And like I said, this would be on our M15 time frame. Okay. So once we're in, the next thing that we have to do now is pretty much just maintain our trade, right? So a lot of people have trouble maintaining their trade and trying to figure out, how would they go about that. So what they would do, what they would do, or what we're trying to do is basically, we will want to see higher highs and higher lows on our M15 time frame, because that's our structure time frame. And understand that as long as we're seeing higher highs and higher lows on our M15, then of course we're going to see bullish candles on H1. So we're going to see, the purple candles going up like this. But if we're on M15, we're going to see the flow of the market. You know what I'm saying? So yeah, we would maintain this order. Say we got in here. Let's just say like a standard. All right, so we got like a standard right here. We'll be maintaining, seeing high highs, high lows, M15 bullish candles on H1 till we got to our point of resistance that we see right here. And this is when we have to understand what's the difference between tested candles and broken candles, okay? So like I said, tested points you see at every point, major point in the market. It turns price. So tested, 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 tested. These are all your structure points. So your tested candles give you your structure points. Your breaks, however, occur in areas like this. I'm going to use that because that's the color. Use green. You can't use green. Red, fuck it. So yeah, your breaks would be in areas like this. And what those breaks would look like is if I hit a previous level of, first off, like I said, where you find them at previous levels of resistance or previous levels of support. So these is where you would see your breaks at. I had a random one right here. You can see it somewhere up in this area. See it in this area. I had a random line like right here. You could see it in this area. And then another random line right here. See it in this area. So the red areas are where you could see your breaks. Okay. Now I'm going to show you exactly what those breaks look like. Now that you understand what tested candles look like. Okay. So tested, like I said, would just be areas, for instance, like this, where the market is struggling to break past. It maintains that level of resistance, or down here, it maintains that level of support. Your breaks, however, if I have, for instance, in the uptrend, we got that resistance line right there. If I had that resistance line right there, it would look like this. It would be one bullish candle that forms on that level of resistance. So it will form on this level of resistance right here. I'm going to turn it purple just so that we all on the same page. And then you will have another bullish candle followed by that with enough momentum in it to let you know that the buyers are ready to continue pushing. Okay? So if you've seen a candle that was like, it started doing this, little dojis and things of that nature, you couldn't really consider that a break. You see what I'm saying? Because it's still like in this same area. When you see a break, you want to see some momentum, right? Even if it's like a little bit of wick, but you want to see enough volume in that candle to let you know that that area is broken. We're headed to the next higher high point. So like I said, this is what you would see on, it would be bullish, right? Back to back. And you would see that on your M15 time frame. Okay. I mean, not on your I'm sorry, not on your M15. You will see that on your H1 because that's your main analyzing time frame. On your M15, what you would see, if it's that same line there, you would see structure points, right? Like we were talking about. So it would be and instead of it doing this, you know what I'm saying, breaking that resistance, maintaining that resistance, you would actually see that continuation happen and the market continue to keep going. So you would see the uptrend on your M15 time frame, and you would see back-to-back bullish candles on H1, if that's your main analyzing time frame. So that's what you would see in these areas, and it will let you know. So we were maintaining on M15, seeing higher highs and higher lows. Let me make sure nobody else in this joint trying to get in real quick. Yeah. Okay. So yeah, like I was saying, yeah, we got in, boom. We were seeing higher highs, higher lows on our M15, bullish candles on our H1 till we got to a previous level of resistance right here. We zoomed in, we scrolled, not scrolled, but we went back down to our M15 because we needed more data, right? Understand that seconds equal minutes. So the things that has to happen on the lower time frames to build up the higher time frames, okay? So we went down to our M15 to see if this area was going to test or if it was going to break. The area ended up breaking, so we seen a continuation of higher highs and higher lows on our M15 time frame. Back-to-back bullish candles on our H1 time frame to let us know that that area broke, and then we seen a continuation until we got to a level of resistance up here. Once we got to this level, this is our new higher high point. It gave us tested candles, so it gave us our bullish candle, and then our bearish candle, something like this. Let me just highlight this too, so I don't gotta keep it. These two candles right here. Right. So we got up here. It gave us, like I said, bullish, bearish. We went on our lower time frame M15. We seen a higher low point was broken. We seen a new lower low, and we seen our first lower high point. Now that lets us know that this is now valid, and we can now expect a counter trend. So now that we have a high low point, we're in our order. In order for us to maintain our order, that's when we could use, our Fibonacci tool. And I always forget what this shit is. All right, so that's when you could pull out point A to your point B. You see that the market came and tested at our 50% level right here. So, but we wouldn't want to wait until the market came all the way back to 50% because now we just gave away 50% of our profit, right? So what we want to do is be on our H1 time frame and our analyzing time frame, monitoring this downtrend. So monitoring these lower lows and lower highs, and we will understand once the area got to, I would say my safe zone is like this area right here. It's 38.2. If the area broke this, I would be out of my order because now I'm giving up too much profit. I'm giving up, I already gave back 38% of my profit that I made. You know what I mean? And that's just enough to see if the market was going to, give a little to see if the market's going to continue. But if it broke, meaning if I seen bearish close under this 38.2, I would be out of my order. Okay. And then what I would be doing is still analyzing. But like I said, how would you know if this 38.2 was going to break? You would see a continuation of that downtrend. If it tested, then you would see that it broke a lower high point right here, made a new higher high, and then came back and made a higher low point. It didn't do that in this case. In this case, it continued to make lower lows and lower highs on our M15, bearish candles like this on our H1. Okay, so boom, we exited this order right here. And then now we're analyzing, still seeing lower lows and lower highs in 15 bearish candles on H1 till we got to tested candles where we seen a bearish candle followed by a bullish candle that maintained this level of support at our 50% level right here. So then what we would have to do is, again, go down to our M15 to see if that support is actually valid. So how we would see that the support is actually valid, we got to make sure that this area was broken, like I said. And then once this happens again, we seen the lower high point was broken, got our first higher low point. We understand that area is valid. What are we looking for at that point? We're looking for some type of variation to let us know that the buyers are back in the market and we're ready to continue with the flow of our uptrend. Understanding that we're at a higher low point. This is our entry base point. You know, we're still making higher lows. We're at our 50% level. You know, so we have some type of confluence, and then we also can see that it maintained at this high this high point, which was resistance, is now, even if I had extended this, you know, and this is how you use confluence, guys. Even if I extended that line, let me change that line too so y'all can see it. You will see resistance now turn support. So this is what we mean by confluence, because now we have multiple reasons why we can get into this trade, right? We're at a higher low point. The market respected 50%. We already seen the transition happen on a lower time frame, and we seen some type of bullish variation, letting us know that there's more buyers in the market than sellers. So then, boom, we get in the market again. Once we're in the market, what do we have to do now? We have to maintain. How do we maintain? By seeing on our minimum time frame M15, where we need to see the detail, we see the flow of the trend. We're seeing higher highs and higher lows, right? On our main time frame, we're seeing bullish candles until we get to a point of previous resistance. Once we get there, we go back to our M15. On our M15, we're seeing a continuation. On our H1, we're seeing a bullish candle followed by another bullish candle that lets us know that there's enough market. I mean, not enough market, enough buying pressure in the market to break past this resistance, okay? So we would continue seeing that and maintaining this trade until we seen another level of resistance. So this level of resistance will be a bullish candle followed by a bearish candle. How do we find out that this level is valid? We go down to our lower time frame and we look for that transition. So as you can see, it gets repetitive, right? It gets repetitive, and then I would once I'm in that order and I see that, I go down to a lower time frame, see that transition happened where we had a break of support. Market made a new lower low, came back, made a lower high point. Now I know that I can expect the market to counter trend. Since I'm in an order, I want to be able to monitor this counter trend and monitor my order at the same time. Use my fibs, point A, lowest point, median of the wick, point B, highest point. Market broke past my 38.2 right here. So boom, I will close that order because I understood that I kept seeing that downtrend, and I seen a bearish candle followed by a bearish candle on my H1 time frame that closed below 38.2, and that's, I don't want to give up more profits than 38% of my profits to see if the market's going to continue. So I exit that trade. The market kept going though. So on M15, I kept seeing lower highs and lower lows, and I kept seeing bearish candles on my H1 that broke past this level right here. But understanding that this is my last higher low point here, this is where we seen our breaking structure. So once we seen our breaking structure, let me just move these flips. Once I seen this breaking structure right here, I understand now that my whole bias has shifted, okay? So your bias shifts here. We're no longer in the uptrend, right? And even if we wanted to use like a little trend line here, point A, point B into the future. We have a counter trend line break. I mean, we have a trend line break, not counter trend, but a trend line break. We have, even in this area, when you have trend line breaks as well, you can highlight them in areas like this, and you can see if you're going to see that continuation on your lower time frame, lower lows, lower highs, to see if that market is going to break, and see if you're going to see that bearish candle form on this level, and then another bearish candle form beyond this level, letting you know it's enough sellers in the market to continue pushing down to make a new lower low point. So now that we're out of all of our orders, we've seen that the market made a new lower low point. What do we do now? We're looking for our entry base point, which would be a lower high point. So how do we measure this? We use our fibs. Point A up here. So now we flip it. Point B right here. So the market continued to make lower lows, lower highs in 15, H1 bearish candles until we reached a level of support. That level of support looked like a bearish candle followed by a bullish candle. We went down to a lower time frame. We seen a transition happen where the market was making lower lows and lower highs. So lower high, lower low, lower high, lower low, break the lower high right here, made a higher high, came back, made a higher low point. Except we do not buy this time because we understand that our bias shifted. So now this is a counter trend. We understand that this was our transition to let us know that this was valid. So this happened on M15, and we're seeing this on H1. Now that we understand that it's valid and we're expecting a counter trend, we're seeing, and we seeing some type of variation to let us know that the buyers are in the market or engulfing. We see we're monitoring it. So we're seeing higher highs and higher lows on our M15, bullish candles, like these purple candles right here on our H1 time frame, until the market reached a point of resistance on our main time frame, on our H1 time frame, because that's our main analyzing time frame, right? Market came up here, made a bullish and bearish candle. We went down to a lower time frame to such as our M15 to see that transition happen where we had a higher low point broken, and the market made a new lower low and made its first lower high point. So now all we do is flip it. At this lower high point right here, we're looking for some type of bearish variation, right? So that's when you will see the market right? This is what a bearish engulfing will look like, because we understand that a bullish candle opens low, closes high. Bearish candle opens high, closes low, but it closed above the opening of this bullish candle with enough volume below, letting us know that there's enough there's sellers in the market at this time, right? So at that point is what we would see right here on our M15. Once we seen that, that's when we want to get our first entry at our entry base point. And understanding that we're at a 38.2, which is a PRZ level, which is an official lower high point. Our first official lower high point. So we got in, and then even understanding what 38.2 means, we could say that we're expecting our negative 27 to hit aggressively, right? So we get in there, say we got in with a standard. What do we do now? We maintain, looking for on M15 to see lower highs, lower lows, lower highs, lower lows. See that continue. We would see bearish candles on H1. So we would see gold candles on H1 as the market is trending down. Right here, it was support. So once it's support, we would have to zoom back into our M15 to see if that support is going to be tested or if it's going to be broken. And if it's broken, if it's tested, it's going to look like this. So we have support here. It would be a bearish candle that forms on that level of support. And then another bearish candle that forms after that level of support and closes beyond that level of support. Okay? Same thing, except opposite direction. All right? On our lower time frame, this is H1. This is what we would see on H1. On our lower time frame, such as M15, we would see that continuation of the downtrend. Okay, M15, H1. You're seeing that right here in these areas. So it broke past, right? So we seen the continuation on our M15. We seen bearish candles on our H1 till we got to a level of tested candles where we seen tested support, bearish candle followed by a bullish candle. How do we know if that's valid? We go down to a lower time frame to see if we see that transition happen where we seen the market making lower highs, lower lows, lower highs, lower low. A lower high was broken, made a higher high, came back, made its first higher low point. After that high low point, we're looking for some type of variation pattern to let us know that the market is ready to push, and we're looking for that counter trend, right? Make sure niggas is good. Yeah, we still good in the chat. Yeah. So, I didn't do that. All right, good. So then, we move our fibs right. Now we was at point A to point B. We got our point C. Now we're going back from point A to point B right here to try to get some type of point C. But our 38.2 was broken again, right? So that's where we would pretty much close out our order at. Is at that 38.2. Not giving up too much to see if we could get more, right? But you always got to be willing to give up some to get more back in return. So, and 38.2 should definitely be enough to see. If you're giving up more than that, then you're just being greedy at that point. Okay, and this is, like I said, on your you could check to see if it's gonna break past that on your M15 to see if you're gonna see that continuation. Or if you your H1, it would look like this. It closed on your 38.2, and then you would see another bullish candle that closed past your 38.2, and then that's when you would want to get out. Okay. What time is it? 5:22. Yeah, so it's about an hour. So yeah, anybody have any questions? I just wanted to go over like some structure stuff with you all and understand and test it, you know, versus broken, and then also, you know, how to take advantage of your entry base points.
Devontae, I got a question.
What's going on, bro?
So you know where you marked that tested candle on support?
Mm-hmm. Tested on support.
Yeah, right there. In the middle, dead center.
Yeah, right
Yeah,
here.
right there.
Mm-hmm.
And you know how you gave that example to the right? Would you actually be able to drop it down to the 15-minute and show us what the candles are showing?
Yeah, no problem. If it's not too far, it might be a little far, but I could definitely show you an example. It's no problem. Let me auto get closer so that way. All right, so for instance, support right here, we got sure, so this was the lower high point right here that was broken. So high, low, high, low, high, low, broke above, retest, bullish engulfing right here. You also could have waited until this area broke out to let you know that it was broken. And this is an example of a break right here as well. Candles like this to understand it is broken. So even if you were like, okay, the market came made support. I seen that the market made a high point right here, made a low, broke above this area, started make higher lows. And I understand once the market begins to make higher lows, I understand that the downtrend is weakening, right? I'm starting to see all this exhaustion towards the bottom. It's maintaining. It broke right here. So even if I was to point A, point B, point C, you could take advantage. Understanding that you have exhaustion down here, you already had your breakdown here. And then even spreading it out to understand like areas like this as well, how you could take advantage of like scaling opportunities. You know what I'm saying? But that's one example. Oh, hello? You still good?
Yeah, that makes a lot of sense. Appreciate it.
It makes more sense. Dang, it's storming like crazy. But yeah, and that would be the same thing. So like, even if you know you're looking at areas, let's say we go to a different pair because US 30 is a little different. So let's say market found support right here. All right, here's bullish. Here, got another area right here. Drop down in 15. All right, so we had that broken right here, and then we didn't really have like a type of retest, and we also, even if you're counting, like this area right here could have been looked at because of how this candle was formed, right? Because we had down, up, stop right here, maintained a little support on the lower time frame, gave you a lower high point right here. So if you're able to have candlestick analysis to actually know candlestick anatomy like that, you will understand that this is a lower high point on the lower time frame. Probably sets like M5. Let me see if we can go there now. Since we're not too far back. See what I'm saying? Lower high point, boom, came back, boom, boom. There's a retest right there that happened. So we couldn't see it, like I said, on the hot on M15, but on M5 you could clearly see the retest, right? Boom. Looking for some type of engulfing with enough volume. I would say all of these are dojis, so get X these shits out. All we want to know is where's the data at, right? So you can X those out. The data came back up here. So I would be looking for something to break above like this area probably. Once I seen that it was support and I seen like how these candles was forming on this, I could have went back to my M15 and then had an entry in somewhere up in this area in this candle actually though, you know, and then took it up if that's what I wanted to do. And then same thing with this area over here. All right, got your counter trend that's happening. Boom, boom. That you had low right here. We had tested right here because it bullish, bearish. So it withstood this, made a higher low point. So the break happened right here. Formed on this level and then closed above. So I'll actually say a combination of these candles, this formation right here, was actually the break. If these didn't have the volume that it had in it, then I wouldn't consider it a break because of the way that it came back to retest. But if you was patient enough and understood what was happening on this M5 and then looking at it at M15 as well, you would understood that you had that break happen. But you would have had to wait because this candle is the one that said, okay, we're testing this level. But then the fact that this candle opened and closed above with all this volume in it right here, let me just zoom in so you all can see it. This candle right here lets you know that it's broken. So then I could point A, point B, median of the wicks, point C, never broke 23.6, came down to test 38.2 with the wicks. But it really only tested 23.6 because it never broke beyond 23.6 on this time frame. So then I could be, it's a bearish candle right here. I could put a line right here, understanding when is that going to be engulfed, and you know, this would have been a good entry candle. This candle right here, even if you wanted to wait a little bit, could have drug this out just to see when this area broke. Been a little bit more patient. But any of these candles right here, this is this is like a variation. This is an engulfing. And these are the type of areas that we want to take advantage of, right? So even if we did enter up here, you know, stop loss would definitely want to be, 110% under our last higher low point. And then just understanding that we're on a 23.6 on the M5, but on our H1 time frame, we're seeing all of that support. We already had our break. It's a double bottom pattern right here. So we would have been, that's why you have to be able to use multiple time frames to get data and use the data to your advantage. See what I'm saying? But yeah. Anybody got any other questions? Let me check the chat just in case. Finally, I don't know. But yeah.
I'm not too long gone, bro. So I'm just following along. So far.
Just following along? Okay. That's smooth. I just want to make sure that we all on the same page. Everybody's good.
Got it.
Got it. All right, that's cool. I'm not gonna keep y'all too long. I appreciate y'all. This will be recorded. I'm gonna send it to Drew and just make sure let him know how I'm doing, things like that, so that way if you all want to continue these breakdowns, things like that, and y'all find it useful, that we can continue to do this. All right.
Bet.
All right. Cool. All right. Appreciate y'all.